Hey guys, what's up? Alec back with another stock market investing video. And today we have the most popular video on the channel. It's going to be a watch list of 15 different stocks with price points for the entire week. So this is the one that you guys always love. So make sure you watch the whole thing to actually get the price points on every stock. We're talking about 15 stocks today. Now you might see that it's Sunday and we're at $13,583. We're up $116 today. And that is because of crypto. So just to do a quick crypto update, it's back up to 18,000 Bitcoin. Litecoin's back up to $80. You know, I was buying more at about 60 something dollars. So we actually had a good gain on that. I was buying a lot at like $65, $68. A lot of money involved. So that was the little crypto dip that I hope you guys did get in at least a little bit of money on. But let's get straight into the video today. All right, so the first one we're going to be talking about is Moderna, and it is one of my favorite ones out of the vaccine stocks. I will be making an entire video in the future about all the vaccine stocks. I'll probably be hitting on like the top 3 of them. But as you can see, it's up 27% in the week, and in just one day, it went up 16%. Up 87% in the month, and about 90% in the last 3 months. So I would say if you can get in at this one, right at about $100 to $105 a share, I think it's going to be a good thing for a long-term position too. Because Moderna is actually not just for vaccine. They're actually releasing a bunch of other medicines and vaccines in the future too. So I think Moderna can actually be like a 1-2 year, even 5-year play, especially with Joe Biden becoming president and healthcare on the rise. Moderna is definitely one you want to have on your radar. Now, the next one after that is going to be Workhorse, WKHS, and we talked about this one right when it was on its decline, right at about like $16, $18 a share. We were picking up a lot of shares in my group here, and then it rose all the way up to about $28 a share. And if you look at a chart here, it looks like it's hitting its resistance point of about $28. So I would say if you do have some shares currently, it would be a good idea to take some profits, sell out a little bit, because as you can see, it's on the way down, but it can go back up if there is some good news. Obviously, we know Workhorse is depending on a lot of good news. So here you'll see we're up 27%. And the USPS contract is the one that I am talking about. The good news can skyrocket this stock to a $50 stock in the next 12 months is very realistic. But if you are going in with a swing trading mindset, I would take some profits now and get in back at about $20 a share. I think is realistic. Even $22 a share. Your price point right at about $22 a share. I think we couldn't get back down to those rates again because as you can see, a very popular support is actually right at about $16, $18 a share. So $20 I think is going to be coming again for Workhorse. So if you do have a lot of profits and you're holding a very large position, I would recommend probably taking some profits, waiting for it to go down $22 and buying back in on Workhorse for a swing trade. All right, so the next one's Draftkings, ticker symbol DKNG. And this is one I want to do a full video about. So we'll just do a quick update right now. And then in the future, we'll do a full video. So 5% up on Friday, 8% in the week, 34% in the past month. So it was really good if you were getting in right around $35 a share. You were probably making some money here. In the last 3 months, it's still up 43%, even with that big dip it went through. So as you can see, it was at an all-time high about $63. Right now it's at $52. So it looks like right now it's still on the climb up. And I think this one can easily go back up to $60 a share. But I would want to be buying right at around like 48, 46 to 48, I think is a good buy for DraftKings. It is possible that we can see a little dip going on here too. So back to $47, $48, I think is pretty realistic for DraftKings. And then you can write it all the way up. I think this one will actually hit new all-time highs. So even if you get in at $52 a share, I think there's still a strong possibility that in the next 3 to 6 months that you can actually see this one at new all-time highs, passing $63, passing $65 a share as well. So the next one we're going to be talking about is Fastly, ticker symbol FSLY. And this one you'll see is 1%, 1.3 up on Friday, up 0.4 in the week, and it's up 12% in the month. So right now it does have some upward momentum that you might want to be taking advantage of, because if you remember, this one is very up and down like a roller coaster, so it's good for swing trades. So you see it was at 100 and then it went down to 78, then it went down to 1, then it went up to 111, then back down to 76. So it looks like a popular support is right around 76, 74, 80. So right around that benchmark, and right now we're at 84. I think that this one can easily go back up to $100, $110, even new all-time highs of $120 in the next 6 months, more of a long term. But I think this is a good swing trade if you're going to be getting in right at around the support, the popular support of like 82, anywhere from 74 to $82. If you get into fast lane, you can ride that up, and then I would probably be taking profits right around like $100, $110 for take some profits. So Fastly, I think, is a good swing trade. But the good thing about Fastly, it's also a good long-term hold if you choose to go that route with your position. Fastly, if you want to look a little bit more into it, we can do a more detailed video in the future, but they have good long-term potential as well. So the next one's going to be Nikola, NKLA, a little bit more of a risky stock, and it's going to be an EV stock as well. So this one's down about 8.6% on Friday. It's up 2% in the week, up 38% in the month. So it does have some momentum right now. Now, this one is a little bit more risky, and I don't know if I believe in it long term, but I think we can actually see a good swing trade opportunity here. So right now it's on a little bit of a down, and it can easily go back to the support of $18. Anything under $20, I would say, is a buy for Nikola. And as you can see, an all-time high was all the way up to $73. So this one can be an easy 100% gain if it just gets that partnership with GM. You guys would probably know about the partnership with GM is supposed to be happening. It's not 100%, obviously. And like we talked about Nikola in the past, there's been a lot of drama with Nikola. So there's no guarantees. That's why I'm saying it's a little bit more risky. But with risk comes reward is a good thing. So if you want to put it down for about $20 a share, I think if you get in at $20 a share, you don't have much to lose, but the risk versus reward on getting in at $20 a share is very huge, because you can have a triple up in your money. You can see a 100, 200% gain. And if you get in at $20 a share, I think you can only really lose, in my opinion, like 20, 30% compared to gaining 200% to 300% too. So definitely want to look into Nikola. Do your own research, do your own due diligence on this one. But I think that this is a great one to be getting in at right around $20 a share. So after that, next on the list, we have Alibaba, ticker symbol BABA, one that you guys all love and one that you guys all know. It's down at about 10% in the past month, keep in mind, down 4% in the past 3 months, and it's up 38% in the year. So as you see, it had a little bit of a fallout here, a huge loss. So that's the time when I was going to be making a video and saying to buy this stock. I think if you get in right around 260, 270 is a really good benchmark to get into Alibaba. If you're long-term on the stock and you're going to be holding it for a year or 2 years, I think it's great to get in at 275. But I would prefer to get in at 260 to 270 and hold for the long term. This one isn't that much of a swing trade. I would say that this is a more of a long-term position hold, and it can actually be a great 20 to 30% gainer every single year too. This is a consistent company, and it's a huge company. As you can see, it's almost $1 trillion market cap, and the PE ratio is only at 39, which is a good indicator that it's not too overvalued right now. Now, I would go ahead and read through some of these articles, because I know that they are cracking down on China right now with some of these stuff going on. House to vote on booting Chinese stocks from U.S. over audit rules, which could be a huge thing for all Chinese stocks. I don't think it'll personally happen, but obviously it's in the news right now. And it's definitely something that you should be familiarizing yourself with. So after that, we have Wynn Resorts, ticker symbol WYNN, up about 1% on Friday. And we already did a full video on this one, so you guys already know how I feel on Wynn if you did watch that video. But I would like to be getting in at right around 95. $86 is my average cost on Robinhood. It's a lot lower on Webull. as I showed you guys before. I have about $1,500 in Wynn, and we're up over 17% overall. I would like to be getting more around $95, and this is going to be more of a long-term position. So anywhere from 2 years to 3 years, I think you can see 100% gain on your money. This one can easily be $150 to $200 stock again. And if you want to see my reasons why, go ahead and check out that full video I did on Wynn Resorts. It is a very good company. It's super undervalued. And I think there is a great future ahead of it once the pandemic, and as you can see, right when everything started to shut down, it did lose some steam. So once we get back to normal and travel starts ramping up again, I think that Wynn is gonna be one that you definitely want to be ahead of the 8 ball on and not behind it. Once it's already up to $150 a share, it's a little bit too late at that point. So it's definitely one that you want to get in ahead of time. All right, the next one, Wells Fargo, we definitely talked about on the channel before too. And it's up 34% in the past month. When I was telling you guys to get in right around $22, I put in my last video, $22, great time to get in. And a lot of you guys did get in at right around that time when I was saying to get in. It's a little bit more of a risky stock. I think this one could be a 100% gainer over the course of the next 2 years. But I would like to be buying this one right around $25 a share. I think is fair for Wells Fargo, especially if you plan on holding it for a year or 2 years down the road, even 3 years down the road or 5 years down the road. It's definitely worth taking a look into Wells Fargo, especially at $25, because look at this stock was trading at $40 to $50 for a very long time, and the only reason it shut down is because of the shutdowns. It went down. So if you can get in at $25 a share, it's like going back 10, 15 years in time and actually picking up some Wells Fargo stock and holding it. Now, the next one is going to be Disney stock, ticker symbol DIS, and it was down about 1.5% approximately on Friday at $147 a share, which is pretty close to an all-time high. If we go to look at their all-time high, it was right around 150, and right now it's at 147. So it had a spectacular comeback from the shutdown. Remember, it was at $85 a share, and then it rose up like a crazy person. They did just lay off 32,000 workers, and they're probably going to be shut down for at least a couple months. Now, I know they are focusing on their streaming platform. Disney Plus is probably why they're gaining a lot of steam and not really Disneyland and Disney World. But obviously, that's still a big part of their income, and I think they can be hit in the next couple months. And I think they can easily get back down to $120 a share. Even $115 a share is super realistic. So if you put them on your list for $115 to $120 a share, I think it's definitely worth it to hold for a long time and a long term. And this is the kind of stock that you're going to want to hold forever and pass down to your kids and your grandkids. So if you get in at $120 a share or $115 a share, I think we can easily see this one going up to $300, $400 and splitting. You know, Disney is known to split, so I think this one could split again. And the next one we have is a stock that everyone knows and everybody loves, Amazon, ticker symbol AMZM. So this is one I was saying to get in at about anything under $3,000. As soon as you see a 2 in front of that, you definitely want to start buying. And we have seen that a few times. You know, 2,900, 3,000, 3,035 is the time you definitely want to be buying. So right now I would say right around 3,000, 3,000 flat, I would be buying partial shares of Amazon and holding for a long time. This is one that's going to see crazy growth of revenue every single year. Double digits of revenue growth every single year for at least the next 5 years. We can see 20, 30% gains on this stock for the next 5 years. So it's definitely one that you're going to be kicking yourself if you're not getting in at a lower price. Also, I think we can see a potential split in Amazon in the future. So, you know, you guys always know what happens with splits. You know, it causes the stock to rise up consistently, very, very rapidly. This one was trading right around $1,600, $1,700, $1,800 for almost 2 years. And then it just had its growth spurt of a crazy percentage recently too. So is there a chance that this one could go back down to $2,400, $2,500? Of course, anything is possible, and I'll be buying a lot of Amazon if that does happen. But I think that $4,000, $5,000 in the next 2 to 3 years is more realistic for Amazon. And I think they can even be doing like a 4-to-1 or 5-to-1 split. So you definitely want to be getting in before that too. After that, we have one of my favorite stocks in the stock market right now, which is going to be Beyond Meat, ticker symbol BYND. And as you can see, they IPO'd at $25. So this was a good one that you definitely wanted to get in right at IPO. Personally, I don't invest in the IPOs because look what happens. They always go up crazy amounts, 234, which was an 800% gain in the span of a couple months, and then they go back down. So it went all the way back down to $66. That's actually very common with IPOs. So I wait at least a few months to start investing into an IPO. Like a lot of people are asking me about Fisker and Airbnb. I'm definitely going to be waiting to invest into those. I don't buy them as soon as they IPO. Now, what you see with this one, it trades at 125 for a long time. You can see the old resistance here was about 120, 125. The support turned into the resistance. So now you'll actually see this. The support is actually 125. And it went down to 128 again. That's when I was putting out the video telling everyone to buy Beyond Meat at that time, 124. Right now it's at 142. So I would say if you can get in at this stock right around 135, would be awesome for a long-term hold. This is one I want to be holding for 2 years, 3 years, even 5 years down the road. I think that we can see some explosion in the growth, and I can see this one going to new all-time highs. I can see it going past $250 a share. So if you want to load the boat on this one, if it gets down to 125, 135, you definitely start buying, but definitely start loading the boat right at 125. I think is an awesome price to be getting in at. Even 135 for long-term as well. Skyworks solution is one that I'll probably be doing a more in-depth video about because I do really like this one for long term. This is going to be a 5G stock, and it is a chip that is in the Apple phone too, keep in mind. Now, the support right now is right around 127, 125. So if you can get in at 127, 125, I think it's going to be a very, very good for a long-term hold. This one can see 20, 30% per year for the next 3 to 5 years as well. So if you want just a nice gainer, Skyworks solution is going to be the stock for you. And just put your price alert right around 125 on Skyworks. Now, Intel, ticker symbol INTC, is a great one that's been following the same support for the last 3 years. As you can see, it follows $44, $44, $44, all these supports at 44. So it never goes below $44 for the last 3 years. So I think it's very safe to say that it will not go past the $44. Even in March, where was it? February and March, it still didn't even go below $44. It was at 45. So it's below that, and I think it's a great one to be getting in right at $45 a share. Now, on my close friends group, I did put an option call out for Intel because I think it's unrealistic to go below 44. And right when it was at $44, I was saying buy the option call. And right now it's at 47, so we already have some gains on that. So I think over the next 1 to 2 years, we can see this one back getting close to about $60 a share, which is going to be some explosive growth right around 30 to 40% in 1 year for Intel. So definitely keep your eye on this one. Set your price alert for $45. And keep in mind, it does have a dividend of about 2 to 3% also. DBX is our next one, Dropbox. A lot of people use Dropbox. It has a huge user base. It's up 2.2% on Friday, and I would be putting my price alert right around $18 to $19 on this one. And if you can hold it for 1 to 2 years, I think we can actually see some explosive growth on this one. I can see actually this one doubling 100% in the next 1 to 2 years too. So that's about 50 to 100% per year on Dropbox. It's one of my most bullish positions in the stock market, and I have about $2,000 in Dropbox. So if you're on my close friends list, you know how I feel about Dropbox. It's definitely one of my favorites, and I'll keep adding more money, anywhere from $18 to $19. And the last one that we have to talk about today is going to be AAL, American Airlines, right? Sitting at about $15 a share right now with an all-time low of $9 a share and an all-time high of about $50 to $60. This can easily be a double up on your money. In my opinion, I would be buying it right around $11 to $13 a share. I think in the next couple months or couple weeks, we can actually see the numbers and a lot more shutting down and a lot less people traveling too. Now, there's also an article that said business travel, which was a lot of, airplane travel, obviously, is going to never recover because a lot of people are working remote. There's going to be Zoom calls and everything instead of people actually doing business trips from now on. So I think that the airlines could be down for a long time. And I think that this one, if you buy right around 11, anywhere from $11 to $12, I think is going to be going down to that price point again. And it's super realistic to see American Airlines at $11 to $13 a share. And if you get in at that rate, I would definitely advise you to hold for 1, 2, 3, 4, 5 years because you can easily see 100 to 200% gain on this position too. So American Airlines, $11 to $12 to $13. Buy at that price and then hold. Don't sell. Because even you'll actually see after all the shutdowns, it even spiked all the way up to $20. So if you even want to swing trade this one and you get in at right around maybe $12 a share on a swing trade and sell at $15 or $20 a share, I think that's a quick profit that you can make on American Airlines too. And worst case scenario, if you don't want to swing trade, you can just hold for long term because they'll definitely be getting back up to, I don't know if it'll be getting back up to $60 or $50 anytime soon, but I think getting back up to $28 to $30 in the next 1 to 2 years, maybe closer to 2 to 3 years, is super realistic. And that's like 100% gain in 2 to 3 years. So why would you not buy American Airlines, especially if you're getting in right at about $11 to $12 a share? So guys, that is the video. I hope you did enjoy it. I hope you did like it. The last video we talked about was crypto. I have some Litecoin, so if you didn't catch that one, I think a lot of you actually missed it. Go back and check out the video right before this one. It's very informative on what you should be doing with crypto right now. And I have been seeing all your guys' support. I appreciate all the comments, all the likes on the videos on my YouTube channel. It does go a long way. As long as you guys keep liking these videos, I'll keep making them for you. I come on here every single day. I started with about $1,000 to $2,000. So I wanted to show you guys how it's possible to grow your account consistently every day. All I'm asking for in return is just like the video, comment your thoughts below on what stocks you're like and what stocks you're buying. Let's get a conversation going in the comments. And don't forget to share with a friend that could take some value from this video and you can actually help out. All right, guys, I'll see you in the next video. And remember, don't time the market, buy the market. Peace.